Let's say you run a business, you're selling products, customers are happy, and profits are rolling in. But then one day, you can't pay your bills, your staff doesn't get paid on time, suppliers are chasing you, and you're sitting there wondering, what went wrong? We were making money. This is the exact moment when the difference between profit and cash flow becomes real and painful. Many businesses fail, not because they're not profitable, but because they don't understand their cash flow. Profit might look good on paper, but if the actual money isn't in the bank, your business can still go under. Let's break this down. Profit is what you earn after you subtract all your expenses from your total income. It's what you see on your income statement. It makes you feel good. But profit is not cash. It doesn't always mean you actually have that money in your hand right now. On the other hand, cash flow is the movement of real money in and out of your business. It's about timing. When do you receive money? When do you pay bills? You might have made a sale, but if the customer pays you after 60 days and your bills are due tomorrow, you're in trouble. Let's say you run a small business that sells custom furniture. You get a big order worth $10,000. You're excited. On paper, you just made a great profit. But here's the catch. You have to spend $7,000 today on materials, labor, and delivery. And your customer, he'll pay you in 45 days. So for the next month and a half, you're out $7,000. That's money you don't have right now. If you don't have savings or a consistent cash inflow, you can't buy new materials, you can't pay your team, and you're stuck. Now multiply this situation by 10. That's what happens in many fast-growing businesses. They keep selling, they keep making profit, but they don't manage the flow of cash. Eventually, the stress adds up. Suppliers stop giving credit, employees leave, rent piles up, and slowly the business crashes, despite showing profits on paper. This is why cash flow is often called the lifeblood of a business. Without it, your operations stop, even if you're technically profitable. One of the biggest problems is that many business owners only look at their profit and loss statement. They see a positive number and think everything's fine, but they forget to check their cash position. You can't pay salaries with profit. You can only pay them with actual cash in the bank. Let's also talk about delayed payments. In many businesses, especially those dealing with clients or large orders, payments are often delayed. Your customer might agree to pay in 30 or 60 days. Meanwhile, you have to cover the costs now. If you don't have that buffer, those delays can destroy your cash flow. Another issue is spending too fast. Some businesses start making profit and immediately start upgrading their office, buying expensive tools, or hiring too many people. But if the incoming cash doesn't match that spending pace, they end up in a tight spot. There are also hidden costs. Maybe you're growing and suddenly you need to pay more in shipping, or your electricity bills go up. These little things eat into your cash without warning, and if you're not watching closely, they catch you off guard. So, what can a smart business owner do? The key is simple. Track your cash. Watch your bank balance regularly. Understand when money is coming in and when it's going out. Create a habit of forecasting your cash flow. It doesn't need to be fancy, just know your numbers. Before you celebrate a big sale, ask, when will I actually receive the money? Before you spend on something new, ask, do I have the cash or just the profit? Also, try to get paid faster. Offer discounts for early payments if you have to. Every day counts, and if you can delay some of your own payments without hurting relationships, that gives you breathing space. One more thing, don't ignore your expenses, even small ones. They add up quickly. And sometimes the reason your cash flow is bad isn't because you're not earning, but because you're leaking money in too many small places. In the end, it comes down to this. Profit tells you if your business is working. Cash flow tells you if your business is surviving. A company can survive for years without profit if it has good cash flow. But a company can't survive even a few months without cash, even if it's showing great profits.